Stephen Wieting is Managing Director of Economic and Market Analysis at Citigroup. He joins us now from the New York Stock Exchange. Stephen, welcome back to Bottom Line. Always a pleasure to have you on.
Thank you.
Stephen, more than $2 trillion was erased from the value of global equities just in the past week. Was this the result of the debt ceiling talks being dragged out until the 11th hour, or was it due to concerns about what some people are saying sluggish and other people are saying stalling economy?
Well, I think it's both. I think that this horrible event in terms of the hit it had for confidence sort of weakened everyone's resolve when it comes to looking at the other data. There's been obviously a real slowdown going on, but some of the data simply don't make much sense. It suggests, for example, that the second quarter was stronger than the first quarter when you look at the data revisions, that housing was one of the strongest components of the economy in the second quarter. We know that business was pretty strong in the first quarter and lost some steam. So I think those revisions really scared everyone. But very sadly, I think that these events in Washington, while we've put off maybe the most dramatic risks to the economy right now, it still had some effects on confidence that could sort of get a life of their own and impact the economy on a looking forward basis.
Is that what you're seeing for the most part, that people, even though the debt ceiling debate has been put aside until after the elections, the presidential elections next year into 2013, that people are still a little bit shaken by what they've experienced, what they've been through?
I think so. It may have showed up in the business confidence data that we had from the Institute for Supply Management. You saw it in some of the commentary. We certainly saw it in the University of Michigan's Consumer Sentiment Report, where they had a terrible one-month drop in the approval rating of the handling of government economic policy. We do think that maybe fiscal flexibility has been reduced here. If markets want any of that, it's perhaps not gone completely, but that's an issue. But I mean, the data have been weak, and fortunately, though, I think if you look at the highest frequency data for July, things like chain store sales, auto sales, these types of readings, or the unemployment claims data, they show that we have a continued expansion up until this last moment of this confidence hit.
Stephen, your prediction for the S&P 500 this year is 1,400. We're over 1,200 right now. Is 1,400 still attainable?
Well, that's our strategist's call, so I want to give Tobias Lefkovich his credit for that. But,
sure.
I think that, again, we think that the expansion is intact. It's been challenged by these factors. I think we're all going to have to look very closely at both the backward-looking issues and whether this has any life going forward. But by and large, you don't get horrible declines in equities when you don't have a downturn. And I think there's a big difference between slow growth and recession, where you get a plunge in even the strong sectors of the economy. Those are more rare than some of these comments suggest.
But Stephen, Bill Gross of PIMCO says that the Fed may arrange a third round of quantitative easing. Is that a possibility, given that Fed critics say that QE1 and QE2 didn't have the desired effect? And if not QE3, does the Fed have any moves at its disposal?
Well, I think if you look at Bill Gross's comments, you could see that he's talking perhaps at something a little different from what just occurred with QE2, but I haven't really looked closely at that. But I think what's an issue here is that if we had a more significant slowdown and we had a sharp rolling over in inflation, it would call policy into question. But whether, more asset purchases are any or good, an effective way of helping the economy at this point, I think that the Fed is going to hold off and think about that very carefully.
As you know, the payroll processor ADP said today private companies added 114,000 jobs last month, and that number was within forecast on Wall Street, but it was still well below the rate that would signal a healthy jobs market. That said, the government's broader employment report is going to be released on Friday. What are you expecting?
Well, we think 90,000 jobs overall, about 115,000 on private payrolls. I think that the reality of the employment data is different from what we've seen, where there was this roller coaster, incredibly strong February through April, terribly weak May and June readings. This ADP report probably adds to confidence. I think that we'll get a number that's reasonable for the month of July. I just think that we did not have such a horrendous sudden slowdown in employment or a boom just behind us. And I think that's a report where we could have had worse data today, very clearly, because it included the whole month of July, including some of this confidence hit.
Well, there's talk of a double-dip recession, and 5 of 9 economists on the Business Cycle Dating Committee of the National Bureau of Economic Research say the odds of another recession are rising. How vulnerable is this economy to another severe setback. And it should be noted that the White House press secretary Jay Carney told reporters today the administration doesn't believe there's a threat of a double dip.
I'm somewhat surprised to see NBER business cycle dating economists, that group, comment like that. I think there may have been some pre-existing views about higher recession probabilities. Look, I think that slow growth and recession are very different. A lot of the drivers, the things that fall hard in recessions, haven't recovered from really washed out territory. So that's why I put the probability of a collapse in all the strong parts of the economy, when we don't have very many of them, is lower than that.
Stephen, final minute. Given what a lot of Americans consider to have been the nastiness of that debt ceiling debate, is a lack of confidence in the White House and Congress eroding confidence that Washington can do anything to turn this economy around in a meaningful and sustainable way?
Well, that's a risk, and you saw that in some of the poll results. I think the fact that a lot of benefits recipients for entitlements right now have to look back and say, well, wait a second, you need Treasury auctions to provide this? It's going to hopefully awaken a debate on long-term entitlement reform. But, I mean, there's a lot that could be said about that. I think that there probably is still some fiscal flexibility in the near term, even with this deal in place.
Stephen Wieting, he's Managing Director of Economic and Market Analysis at Citigroup, joining us from the New York Stock Exchange. Stephen, always a pleasure. Thanks so much.
Thank you.